You might have heard recently about the bizarre VAT debate over whether an M&S strawberry and cream sandwich counts as a sandwich. But do you remember this slice of British tax madness? Yes, I'm talking about the Jaffa Cake VAT debacle. Cast your memory back to 1991. HMRC challenged McVitie's over whether Jaffa Cakes should be subject to VAT. Much like with the viral M&S sandwich, the issue was all about classification. In the UK, most basic foodstuffs are 0 rated for VAT, meaning no VAT is charged on them. But there's a twist. Chocolate-covered biscuits are treated as confectionery and therefore are standard rated with 20% VAT. Chocolate-covered cakes, however, remain 0 rated. McVitie's Jaffa Cakes sat right on the border. Despite having cake in the name, they were small, individually portioned, eaten with your hands, and sold alongside biscuits. HMRC argued that they were biscuits in disguise and therefore subject to VAT. If HMRC had have won, Jaffa Cakes would have instantly become 20% more expensive, and that's no small amount, not just for consumers, but for McVitie's too, who could have faced a massive bill in backdated tax. So McVitie's took the case to a VAT tribunal. They made their case with everything from technical baking details to product behaviour. One of their arguments focused on how the product goes stale. When left out, a biscuit goes soft. A cake, by contrast, goes hard. Jaffa Cakes go hard when stale, just like a sponge cake should. To make the point even clearer, McVitie's baked a giant 12-inch Jaffa Cake and brought it into the courtroom. Yeah, it was complete theatre, but it worked. The tribunal considered several criteria: texture, moisture content, density, packaging, and how consumers eat the product. In the end, they ruled in McVitie's favour. The Jaffa Cake, despite its biscuit-like appearance, was legally a cake. Hurrah! The financial implications were significant at the time. McVitie's was selling hundreds of millions of Jaffa Cakes per year. Charging 20% VAT would have increased the price overnight, potentially costing the company tens of millions annually, or forcing them to pass on this cost onto customers. This wasn't just about one brand. The case set a precedent on how other baked goods would be treated, and it highlighted just how illogical and inconsistent VAT rules can be. Now get this, flapjacks, for example, are 0 rated, but add a little chocolate drizzle and they become a luxury item and are suddenly taxed at 20%. The next one is hilarious. Gingerbread men with just 2 chocolate eyes? Yep, it's still 0 rated. But give them chocolate trousers and now they're luxury and they get taxed. Bizarre. This is the kind of tax system that makes life especially hard for small food producers. Big companies like McVitie's can afford to go to court and defend themselves and bake 12-inch Jaffa Cakes. Smaller bakeries and startups often don't even realise their product classification can trigger thousands in unpaid VAT. The line between a snack and a luxury is often arbitrary, but financially it can be completely devastating. So yes, the M&S strawberries and cream sandwich got the headlines, but the Jaffa Cake case remains one of the clearest examples of how the UK's tax system can equal parts absurd and punitive, where a sponge cake with chocolate and orange jelly could have cost millions in tax just because it's the wrong size or shape. And look, that's not a punchline, that is just the VAT rules in the UK. If you've missed it, make sure to check out my recent video on the M&S sandwich tax. It's another wild example of HMRC trying to turn dessert into a revenue stream.